Hey everybody, welcome back to We Talk Money. I'm your host, Chris Dunn. We got Nikki and Travis here in the studio with us. Man, what a wild couple of days. Post-market here. Today is actually, we're filming this on 2/2/22. So
Oh, wow.
welcome to Tuesday.
No wonder
I guess it's on a
everything's
Wednesday though.
falling.
Should have been a Tuesday.
Yeah, I guess the real Tuesday is going to be 2/22/22. So I don't know.
Yeah.
We can fit one more 2 in there. Anyway, markets as of right now, we're filming the show after hours. We got Facebook that's down over 20%. We've got PayPal that's been getting crushed. Tech bloodbath. Bitcoin's down. I don't know what's going on. I know. Oh, by the way, we're gonna make this show primarily questions. We've got a lot of questions that you guys sent through Twitter and also the website. And yeah, so we'll do that. But I don't know. Kick us off. What the hell is happening right now?
That is the burning question. We've had quite a few questions coming in. The one that caught our eye today was from Growth Value saying, is there a possibility of a multi-year bear market in stocks and crypto?
Combined with a stagflationary environment.
A grinding bear market, the likes that we haven't seen since maybe, 2000 to 2002. I mean, sure, we had the great financial crisis and we had the COVID sell-off, but those were like severe.
Yeah.
We haven't had a 2 to 3 year grinding bear market in stocks in a while.
And
Thanks,
I would guess that at least half of our viewers and listeners have not lived through that, right?
Mhm.
Like that's when I was first getting in the markets, was like 01, 02. And so I guess that was my bloodbath in after 9/11. But yeah, I don't know. What if that happens?
Many viewers have lived through the crypto grinding bear.
For sure, yeah.
But not a stock bear.
Yep, we had 2014 going into 2015, right? So basically almost 2 full years of just nastiness, which in hindsight, awesome buying opportunities. And then also 2018 into 2019. So yeah, I don't know. So what's the answer to that question? What is the possibility of a multi-year grinding bear market and a stagflationary environment?
I do think there's a reasonable possibility of a bear market. I think I would put the probability higher that we get a run-of-the-mill correction, a 20% correction in the indices. In crypto, that probably means what, a 30, 40% correction? Whatever you have in stocks, just double it or triple it.
Yeah.
But, I think people are starting to get a little bit too worried. It's not all bad news. I mean, we had Facebook miss after hours down over 20%. That's a massive, I think one of the largest moves we've ever seen in Facebook in a one-day period.
Wow.
At least so far.
In a while.
And since its IPO, yeah. But, Google smashed earnings earlier in the week and was up almost 10%.
Made an all-time high today, I think.
AMD smashed, they were up a ton. And so it's not all bad news. Microsoft last week, Apple last week were great. So it's not all bad news. But, it does beg the question, a lot of companies are coming up against harder comparisons in their numbers this year. Maybe the economy starts to slow with rates rising. The Fed's obviously moving into a tightening cycle. That's all real stuff.
Yeah. And you guys were actually kind of anticipating these few quarters in 2022 last year and in 2020, right? When stocks were ripping, it's like, okay, eventually earnings are going to have to catch up, or things are going to either get beat to crap or we're going to chop sideways for a while. So
yes. However, I was not short nearly enough.
Yeah.
in all the trash stocks that have been down a ton. But it's going to be interesting. Look, I think for me personally, this is a lot like 2018, where you're moving into a Fed tightening cycle. The market may have gotten ahead of itself into some areas last year leading up to it. And, you just are going to have to take some pain and take some drawdowns on some stuff. But overall, it's not the end of the world. And, if the Fed ends up stopping its rate increases after 4 or 5 or 6, it's not going to be the end of the world. I mean, interest rates at 2-3% is still going to be a pretty good environment.
I don't believe that they're going to get interest rates to 3%. I mean, maybe they'll get them up to 2. Maybe they'll get them to 2.2, which is what we were at like before everything kind of went to crap and we saw the pandemic come along. I mean, rates were, I think I was getting like 2.25 on my high interest savings account. I mean, I just don't see I don't see the Fed getting closer to 3 that quickly. I think maybe they'll get, to 1% by the end of the year. Maybe they get to 2% in the next few years. I'd be surprised if they hiked too far too fast. personally.
Yeah.
But I mean, look, we don't know, right? This is what the market's all about. Jerome Powell might throw us some surprises. Who knows? But I'm just not so convinced that I'm not as convinced that we're going into this long, grinding bear market. I personally think that rates are still going to be too low. Inflation is still going to be too high. Which means real rates are still negative.
Yep.
And I still think there's going to be demand for risk assets. I think big tech is still performing. I mean, even with what we saw with Facebook today, yeah, Facebook is slowing down. What's happening right now is the market's recalibrating. It's like it's the great repricing. It's like we went from 2020 seeing tech stocks go to insane valuations that we all knew were insane. But, like you've mentioned, and I've mentioned, it was tough to short those back then because we didn't know if this was the new normal. Was 40 times EV to sales the new normal? Now we're seeing these things cut in half in terms of multiples. But we're all kind of recalibrating here. And I think that I've been looking at my portfolio, some of the names that I'm in that I was maybe adding to on pullbacks, and they're still selling off. And I'm thinking to myself, okay, and I'm trying to think rationally here. And the thing is, we didn't know what the new normal was going to be. So it was kind of hard to predict that we were going to see such large drawdowns in some names.
I mean, who wanted to get in front of stocks or short stocks when they were ripping 10, 20, 30% a day on random, raids by Wall Street bets, right? Like, I remember talking to a good hedge fund buddy of mine about it in like March or April of last year. And he's like, Trav, like, I don't know what to do. He's like, I need a short book to hedge. We are a hedge fund. We need a short book. We need a long book. But I don't know how I can hedge single names. He's like, I think I just have to short indices. And I'm like, yeah.
And even that was a freaking hard game. And it still is not that lucrative because the market really hasn't. I mean, if you nailed the top, okay, not everybody's nailing the top, right? People were shorting probably too soon. And maybe the shorts just weren't as lucrative as they could have been.
Yeah.
And the S&P is still not down that much. Like, if you think about what a bear market is 20%, right? The S&P, what are we down at this point?
Well,
right?
over the past month, the S&P pulled back about 13%.
Right, but
and
where
then
are
it's
we now?
bounced, and we're only about 4 or 5% off the all-time high, which is crazy, because when you look, like you guys said, when you look at these individual names, like so much has just gotten beat to crap. And that leads us to our next question. From Shivit. He says, thoughts on beaten down stocks like Pinterest and Poshmark. This is, I guess, Nikki, where you've been playing a lot is in retail and stuff. And among others, what strategies can you implement so you don't get lost in your own sauce? So I know, you've been talking a lot about Pinterest, and there's a lot of these, like, I guess not massive tech companies and massive retail companies. What are you guys thinking? Are these beaten down too much? Do they have a lot more to go? What do you think?
Look, I've added to both of these literally this past week.
Oh, wow, okay.
Okay. I think that at some point the market is going to go too far bear, in some of these names. Just like it went too far bull, it can go too far bear.
Yeah.
I don't know where the bottom is in these things because sentiment now, that's the thing. Sentiment is really bad in a lot of these stocks. And when sentiment gets really bad, it can go to a valuation that seems ridiculously undervalued. And you're thinking to yourself, how is this trading here? Like, this is a steal. But guess what? Like, it can happen. And that's what I'm thinking tomorrow is going to be very telling, at least for Pinterest, because Snap and Pinterest were down today. Snap was down 20% on Facebook's earnings release, and Snap hadn't even released earnings. Mm-hmm. So the market essentially priced in an earnings miss for Snap before the report even came out based off of what Facebook did. Okay.
It's interesting how, to your point about market sentiment, how much that actually drives price. Like,
so much.
Last week we talked about, the efficient market hypothesis and how that's complete bullshit. And really, it's like the markets get disjointed on the way up and disjointed on the way down from reality. And right now, things are just like full tilt fear. And you can also see that in crypto. Like there's a lot of high flyers that are down 70, 80, 90%. Bitcoin's still in a bear market. If we just take a look at Bitcoin's chart real quick, if we look at the daily, you can see we've got for you guys watching the video, we've basically been in a run retracement extension downtrend since the trap high in November. So already been in a multi-month pullback, and fear, capitulation, just a lot of emotion in crypto Twitter and chat rooms and stuff like that. So it is interesting to your point about how that's really the driver of price is market sentiment.
Absolutely.
You know, a lot of people want to believe that it's fundamentals and then technicals and market sentiment, but it's people, right? People make decisions and people act irrationally, and that's what is driving this.
It all has its place, like in certain environments, right? In some environments, the fundamentals are what's driving. In certain environments, it's the technicals that's driving. In certain environments, sentiment, no matter what the valuation is driving, right? And you know, with a lot of these things, I do think we're going to see if the next week of earnings is a mixed bag, and we see a lot of big tech names missing. And, you know, the market is just doing this huge repricing just because of how crazy valuations did get. It's like this could get very interesting. So at this point, you have to really love the companies that you're buying, and you have to be comfortable with some volatility over the next quarter or two, because we're coming out of this pandemic world, and we're seeing a lot of these names that were darlings no longer become darlings because their growth is normalizing to what it used to be pre-pandemic, but some valuations are even lower than pre-pandemic, you know, at this point in some names. And you're thinking, okay, at some point this is all going to equalize. But right now, I think that people need to be prepared, even if it's a good quality name that they're in, be prepared for volatility.
So, Travis, this is a question that I've seen quite a bit, both on Twitter, through our website, and even in the Discord channel. How do you know when to cut a trade loose and take the loss, right?
Yeah.
Like there's a lot of people that are sitting in drawdowns right now that are going, I didn't have a plan, or I did have a plan, and I'm just confused now. How do you know when to cut it off and take a loss versus sit in that drawdown and wait for it to potentially come back?
Yeah, it's a great question. Actually, we had this question literally today in the community from one of our new members, Drea. So shout out. Yeah. So she was actually asking me, I think, about Lucid, because she had taken a bit of a drawdown in Lucid, you know, I think one other name. And so that was a good example, because it was like, well, you know, how I approach this question generally is, you know, what does the opportunity set look like? You know, did you get into the trade with, you know, fundamentals that are still intact? Is your thesis still intact? I always say that, you know, you cut a trade loose, or you cut an investment loose when the thesis is no longer intact, even if the position has gone against you. And I've had to do that on some positions where, you know, maybe I was in a 30, 40% drawdown, and it turned out there was a reason, because, you know, the company, something had dramatically changed, right? Maybe the balance sheet weakened dramatically, maybe the in markets weakened, or whatever it was. They were losing market share, lost a key executive. There's a million reasons, right? But if the true core of your thesis is broken, you definitely want to get out.
Yeah.
You know, I would say generally though, you know, you are almost never going to like make a perfect decision in getting the exact bottom in a stock. So drawdowns are pretty common. So, you know, we were just talking about some positions like that, you know, that I think I'm in Poshmark as well. Half of its market cap is in cash. Yes, its growth is slowed, but, you know, to me, having a little bit of a drawdown is not the end of the world, because I think that stock could easily be a double or triple in a year or two. So I don't cut that one loose. If it's sized too large, though, and all these other positions are coming down, and I can add to other companies, diversify the portfolio, maybe something else from a risk-reward standpoint starts to look better, then maybe I do cut some and add to the other stuff. It's really like, it's a question of not only the individual investment and why you got into it, but also your opportunity set with the rest of your portfolio.
Yeah.
Are the risk reward characteristics of other stuff better? Because you don't have to make back the money the same way that you lost it, right? If you're in a drawdown on something, you don't have to wait that out and get back to break even or get back to positive, right? That's kind of like a bag holder mentality. So that doesn't mean, again, if your thesis is still intact though, and the stock's only gotten cheaper and your opportunity set is the same, then maybe you either do nothing or even add a little bit. I mean, I think that's generally how I think about it.
Yeah, I like that. And when it comes to like creating a thesis for a trade or an investment, there's really a couple of ways you could do it, right? Like you could do what you guys do a lot in stocks, which is like a fundamental thesis, right? Like this is the valuation of the company. I think in a year or two, it's going to be worth this. Therefore, for the stock price, it could mean this. Let me get in. Good risk to reward based on an idea of how a company is going to perform, right? That's stock like investing. When it comes to crypto, the thesis a lot of times is more technical, right? Like you can base that on a chart and say, I'm buying at this level. Here's my profit target. Here's my stop zone. So like an example of a trade that I had a loss on this year was, or actually, I guess it was last year. Man, time's flying. Was Solana, which by the way is having a big exploit right now. It's unfolding as we're recording, but anyway, I'm sure we'll cover it next week. There was a breakout. So I took this as a breakout trade setup at 2.25, and I had identified my stop zone. And so once that is broken, once we break where my technical stop zone is, I don't hesitate. I don't think about it. I don't hem and haw. I don't bullshit. I just cut it off, right? And I take a loss and I move on. And because I did that, I don't have to sit through the additional, let's see, from that price was down another, call it 50% or more. I don't have to sit through that worrying and wondering what's going to happen and like, oh my God, should I be a bag holder or is this going to come back? I heard some influencer say that I should hold Solana for 5 years, right? Like it's more technical based. And if you have a fundamental thesis that fits with that, like Nikki, I know a lot of times in stocks, you'll take a fundamental investing thesis and also apply some technicals to it.
Oh, yeah. Yeah. I love that. It's fun. It's funny about this because I feel like people don't, this is what they don't do. If, like, say they get out at their stop, right? And then price reverses and goes higher. And they're like, oh, darn it. Like, oh, I'm so mad at myself, right? I have so many regrets. I think that people need to pat themselves on the back more when they do get out of a stinker or they do get out per their plan at their stop loss and price continues to just drop. Like that's something that you should look at and be like, wow, okay, this is awesome. You should be just as excited about that as you are or feel you should be happy about that you stuck to your plan and you ended up, missing out on all of that loss.
Yeah.
I think people don't do that enough. They're so focused on like when price, they get ticked out and then price reverses and goes higher, right? But this goes both ways. And
Selection bias, yeah.
And I think that you definitely have to appreciate that when you stick to your plan and it ends up working out. I think to piggyback on, what we're talking about right now, I also got the question about selling and then buying back. And I got this question twice so far in the past few days.
Like if you sell at a loss and then buy back?
Sell at a loss, take the tax loss, buy it back. Here's one thing I'm going to say about that. Because a lot of people, when they're trying to figure out how to cut trades, they might strategize and try to do that. The one thing that you risk is that price comes back, right? And then when you go to buy it back in 30 days, and this is for stocks, it doesn't apply to crypto yet, but they're coming for you.
Yep.
If you wait the 30 days to buy it back, price could have already taken off and be, way, way higher.
Yeah.
So that's the risk you're taking. You have to wait that 30 days if you're going to buy it back. And you don't know what's going to happen with price between now and then. So you kind of have to have a little bit of confidence that price is going to stay down and give you that opportunity to purchase it back in that month.
And just quickly, like on that, she's describing the case where you've got some losses on a stock and you sell it so that you can claim those losses for your taxes. But if you're going to buy it back, you've got to wait at least 30 days. Otherwise, it becomes a wash sale, meaning you don't get to deduct your losses from the earlier trades
right.
if you get back into the stock before the 30-day period has passed.
Right.
Yeah.
Yeah. Thanks for clarifying.
Yeah, good
that.
note.
I'm going to just really quickly too, like, I think this might be a helpful example to clarify things as well with the question that we had, from our community member today about the same topic, like where she was like, well, I'm in a loss position with Lucid. I might take the tax loss. I'm not sure. Maybe my thesis wasn't as sound. The market's shifted now. It doesn't like these sexy, growth companies that won't be profitable for a few years anymore. Kind of taking a look at maybe some other stocks, maybe Ford. And I said, actually, yeah, I think that actually is a good trade. You're actually trading up in quality there. You could sell Lucid, take your tax loss, get into another EV play. So you're playing the same investment thesis, but you're playing it with a company that's already profitable and only trading at 10 times earnings.
And the market is underappreciating what they're doing with EVs.
And from an EV perspective, like they've sold out all of their EV capacity for the next 2 years. The F-150 EV seems to be like a very good product. The Mach-E as well. So, that's one where I'm like,
looks
actually,
better than the Cybertruck.
yeah.
Yet to be seen. Even though I canceled my order, I'm still interested. But
Sorry.
yeah, I don't know.
Yeah.
The Ford might be the better play. I don't know.
Yeah, I mean, who knows? Maybe Lucid doubles next month, and we all look like idiots, right? But it kind of goes back to what you said, which is, given the information that you have at the time, are you making the best decision? It's not like, you can look forward into the future. Hindsight's 20/20, obviously, but at the time that you had the set of information that you have, which is always incomplete, did you make the right decision?
Yeah.
And that's how you have to evaluate those things.
Yeah, and I like to label it like a graceful exit. Like when you have a thesis, be it technical, fundamental, or a combination of both, when that breaks, I look at it as like, and I call it in the chat, a graceful exit. I'm like, I'm taking a graceful exit on this, meaning I'm getting out and I don't give a shit what happens next. My thesis is done. I'm going to get out. I'm going to separate myself from it because we can always get back in. If something changes and you're like, oh, you know what? Yeah, it cleared stops, needed time to shake out. Now it's setting up again. You could always get back in. But for me, it's about sticking to my plan and being able to trust myself and follow the plan that I had laid out originally. Right. So I think that's a good conversation. I think a lot of people, especially in crypto, they just buy without rhyme or reason, just hoping that, Doge is going to pump to $1 or whatever the thesis is literally, what is everybody else doing? And let me follow that. And that's why most people lose in the markets and become bag holders. So for anybody listening to this, just anytime you buy something, think, what is my thesis and where would I get out? And either price wise or under what conditions would I get out of this thing?
Have a plan.
Yeah.
Trade management is you have to do it. You have to refine that skill.
Yeah.
I mean, I was talking to somebody in Mindset Chat today, one of our members, and they were talking about how they see when it comes to long-term trades, they manage those trades properly. But when it comes to short-term trades, they are all in and all out. And I think this is very common with crypto traders. They're kind of like, I'm going all in. You doge to $1 or bust, right?
Yeah.
And I was explaining, this person had admitted it was sort of laziness. Short-term trades, it's like, it's not as much money. I'm just going to all in, all out. But I think that it's very important. Short-term trading is actually more labor intensive. It's actually trade management is more important because in long-term positions that you're holding for a long time, there's so much forgiveness and price action, right? Like you're holding long-term positions in Bitcoin that you don't even care about right now because like price is going to go up and down over time.
Yeah.
It's more forgiving. I think that when it comes to short-term positions or just any position, it's all equal. Trade management is absolutely so important, and you have to treat every single trade that way.
Well said. Yep. Okay. What stocks do you guys consider as inflation hedges? I guess we could even go more broad than this. We could say like what sectors could be inflation hedges. Obviously crypto, obviously gold, obviously bullets have appreciated in price, land, property, real estate, all that. But what stocks or sectors of stocks that aren't tied to crypto, gold, oil, anything like that? Any companies?
Well, certainly in a rising rate environment, financials can do pretty well. Banks, traditional, brokerages, even stocks like that can do fairly well because higher rates will generally mean that they can earn more on their net interest income. Their net interest income margins have gotten squeezed as interest rates went to zero bound. There's only so much compression in rates there. So, on the flip side, as rates go up, there's an opportunity perhaps for banks to earn fatter margins on loans and things like that. So it's thought that financials could be an inflationary hedge. However, if inflation's too high, it weakens the economy. You get into a stagflation environment. That's not going to be good for loan performance for banks. So there's sort of like this
fine
window,
line, delicate dance
for financials to
Yeah.
be a true inflation hedge. Honestly, the best, the most pure inflation hedges tend to be commodities focused companies, and a lot of those are still very out of favor still, to be honest. Even oil and gas stocks, even though crude's up at almost $90 a barrel now, a lot of the oil and gas stocks are still trading for single-digit price to earnings multiples because the market almost doesn't believe that the current oil prices are going to stick around, that we're going to end up in an overproduction environment at some point in a year or two or three, that oil companies are going to waste this opportunity by spending too much CapEx and doing bad M&A again. But I think there's some good ones with capital discipline trading at 5 times earnings that still provide a really interesting hedge in the portfolio.
And I know we've talked about marketplace businesses because, as prices rise, marketplace businesses are taking a cut of sales. And so that can kind of work. Something like a Poshmark or an eBay or an Etsy. What would be another one?
I mean,
I don't know. Those are probably the
PayPal
ones.
has gotten whacked this week, but even payments businesses like PayPal and Square,
Yeah.
theoretically, if overall prices in the economy are rising, their 2 to 3% cut
Is rising
is
as
rising,
well.
right? Their percentage stays the same, but their overall take is rising with prices.
But then, like places like PayPal are getting like demolished by Bitcoin and other better payment systems. I would
yes,
like
yes.
to put that out
That's
there.
why the stock is down.
Yes,
Bitcoin
exactly. I
Yes.
mean,
fixes this.
nobody uses PayPal or Facebook anymore.
No,
What
but
if I
it's
just
good
type in
to point that
PayPal?
out
There
because
we go.
even a stock that might be an inflationary theme, right? It has pricing power or its revenues rise with general prices. There might be other issues in the business that are creating other headwinds. Like you said with PayPal, it's competition. With some of these marketplaces, maybe e-commerce weakens this year as more people go to concerts and travel rather than buy goods, right? So there's these other issues there. But, if we're talking about a multi-year inflationary thing, you do want companies that either are commodities focused or have the ability to raise prices and
pricing power.
keep margins.
And I guess on the flip side of that, you want to stay away from low margin, high operating cost businesses,
High debt.
restaurants, maybe, like restaurant. What are some big conglomerates?
I mean,
in that
we even
space?
saw Starbucks this past week had a little bit weaker than expected earnings because of that issue, because they're seeing rising inflationary pressures on the wage side and on the cost of goods side. So even though their overall sales are, I think, up pretty nicely, like I think somewhere between 10 and 15% growth in comparable sales this past quarter, I think earnings missed slightly because of higher than
Just
expected
getting
costs.
eaten up.
Yeah.
Yeah.
So
I mean,
restaurants,
And
anybody
that's the
with wage
theme. I
pressures.
mean, we're seeing that theme just across multiple companies.
Yeah.
Because so not only is inflation affecting us as consumers, but it's affecting businesses too.
Yep. Okay, next question. So what I threw out on Twitter was, what should we cover in this week's We Talk Money episode? And this guy said, starting with $0 or 0 Bitcoin or 0 yen or euro, whatever you're like, starting from zero. Like, how do you start building wealth from zero? I think that's what this was asking. What tips would you guys have? I guess something that I would say is work your ass off. Like, make as much cash flow and live as frugally as possible. Like when I was in my early 20s, like I had a couple of roommates, you remember, like we were eating basically ramen and just like stacking as much cash as possible. Don't be flashy. Don't spend money on NFTs. Don't buy fashionable investments. If you're starting with zero, start conservative, stack as much cash. I don't know. That's what I would do.
I think those are great points. I mean, I think focusing on the income side as opposed to investing. I mean, you can still do investing, right? I encourage you to actually spend a lot of time learning and spending your free time thinking and learning about the investing side, and maybe even, dipping your toes in the water, because, taking losses earlier in your career when your capital base is small is actually really beneficial, I think, for the learning side.
True.
But yeah, I mean, focusing on income, how do you increase your available capital? You're gonna want to take in as much excess income, which means, figure out ways to either earn extra money on the side if it's not your job. Think about other maybe businesses you could start, or skills that you can build that you can trade your time for money and actually earn higher incomes. And like you said, then also keep the expense side low enough for a while, right?
Yep.
As soon as you make an extra $50K, don't go blow it on
A BMW.
Yeah, right.
Jinx.
Yeah.
Yep. And so many people want to come into the markets and use it as a machine to generate income. That's a terrible idea. The markets are a terrible place to earn a reliable income. Can you make life-changing amounts of money? Absolutely. Can you do it on a consistent, predictable basis? Hail
But
to the no-no.
TikTok told me you could.
Yeah, just buy low, sell high, right? Like day trading for daily income. That day trading used to be a profession that you could actually make a living in. In these markets, it's not possible
The
to make
algos
a.
are too smart.
Yes,
They're smarter
The
than you. I'm
competition has eliminated that. Like, just don't try to do that. That would be my advice. Don't look at the markets as a way to earn a paycheck on a daily basis. We'll have days, weeks, months, and years where I make more money than I've made in prior years. Like, I've had some trades where I make more money on a single trade than I made in prior 2 years, right? Like, the markets are just inconsistent like that. So think about, what can I do to increase my consistent monthly cash flow? And then stack that cash and invest it wisely.
Yeah, great points.
Well
Great points.
said.
What do you think?
I mean, the financial planner in me is like, make sure you have your emergency fund set first.
Yeah.
And then once you have that, then you start investing. If you're starting from zero, you
Yeah.
literally are starting from scratch.
And why would somebody want to have an emergency fund? To me, it's because so you don't make fear-based decisions, right?
Yeah,
Where
yeah.
you're not-
I mean, because if you don't have an emergency fund for most people is going to be like 3 to 6 months of essential living expenses.
yeah,
And so, some people need more. Some people, it depends on your situation. But if you don't have that and you start investing right away, and then your car breaks down and you need $1,000 and you have to sell your investments, and maybe they're down and you lose money, or just so many different things, right?
yeah,
Or you have to use high interest credit cards, and that's where you get in big trouble. So
Mhm.
that's why we want to have an emergency fund. Everybody needs one. I don't care how wealthy you are. And, make sure you have that liquid capital available if something bad happens, so
Well
that you
said.
don't have to rely on taking out assets at the worst times
Yeah.
or credit cards.
It's interesting. I was reading an article the other day actually about, how this market environment has shifted. Like last year, there were a lot of people who thought, well, this stock market game or this crypto game's gotten so easy. I can make so much money. All these stocks are going up 10, 20, 30% on these squeezes every day. And so there were a lot of people that actually quit their jobs to do investing full time
Yep.
on
Mhm.
capital bases that were relatively small. I mean, I think if you're at 10 plus million of capital, then maybe investing can be your main thing. But if you're, at 500K, you can't expect that the market environment's going to stay that fruitful, right? And we've already seen in the past 6 months, it's changed a lot.
Oh,
so
yeah.
now all this pressure to earn your income. And by the way, a lot of these people who retired at 30, their top earning years are going to be between the ages of 25 and 55, or 25 and 45 probably.
Yeah.
So are you going to go away and give up your career to do investing? It's a risky choice. Some people can make that happen, but
Wall Street Journal did a whole thing about people that did that, since all of this craze in the market. People straight up made $500,000 or $150,000 and they quit their jobs, like young people.
Yeah.
And look, it feels good when that happens, but that's not going to last forever. And I think that a lot of those people are now having to get back into the workforce because they thought they could do this because the market made it seem so easy.
Yep.
And look, the market always humbles you at some point in your life, no matter what. Like, it just is that way.
Yep. That's the part of the game, and that's kind of the beef I have with the lean fire movement. So the FIRE, financial independence, retire early, it's a great concept, but people that try to do it by cutting out the $2 coffee and living on a shoestring budget, the problem with that is if you're trying to quote unquote retire on $500,000 or something, and you've got another 50 years of life, The problem with that is if you have a 50% drawdown in the markets or your investments, the safe withdrawal rate is going to go probably below poverty level. So anytime somebody asks me like, Chris, should I quit my job? My answer is hell no, not unless you're 10 million plus, right? Not unless you can take a withdrawal rate of say 1% of your assets or less, and you have a ton of room for volatility, especially if the majority of your wealth is in crypto. It's like, that's insane that if you think you're going to live off of 1 year's gains, again, unless you're in the $1 category and but we've seen people blow tens of millions of dollars, so you still have to live frugally.
Yeah. I mean, it all depends on your lifestyle and how much you have saved up and what you calculated as your return, over the years, your expected return. And I think that part of the issue there is we've seen such great returns. If you look over the past century, the annualized return is around 10% of the S&P 500. After inflation, you're around 7, right? Give or take. And a lot of people are using those numbers to project. And, we don't know what the future brings. A lot of people are saying we're going to see lower returns over the next few decades. So I don't know, maybe we do, maybe we don't. But I do see a lot of people, especially in the FIRE movement, that they project their balances, their account balances, like it's going to be a thing. And like, this is what I'm going to have in 30 years. You see it on TikTok and Instagram Reels all the time. And it's like,
that's if you don't have a life event that you have to draw money. That's if you don't make mental or technical errors.
Yeah. What's your inflation rate you're using? What's your rate of return that you're using?
There's a lot of variables in there.
How is your portfolio actually allocated? Lots of things.
Yeah.
But I did have somebody ask me for this podcast about how we think the whole YOLOing GameStop culture, what we think about it and what we think about how it's affecting the markets. And I think we kind of answered that question. Sorry, I talk with my hands, so I'm like
swatting that mic.
Yeah. Sorry, I'm Italian. And I think we kind of answered that in a roundabout way, is that it is dangerous. I personally think this whole YOLO culture, buy it till the moon, it's causing people to believe this false reality of how the markets actually function. And it's not good trade management. It's not good for your mental state.
Yeah.
And that just pours into so many things when it comes to us being investors and fine-tuning ourselves. So
I mean, I do love the cycle when stocks are popping 10 to 20%
right,
every day
right.
on no news.
If you're a skilled trader, you can take advantage of that for sure. And we did. We had our moments.
Oh yeah. But I get what you're saying. I think what you might be referring to is, some of the meme stocks where people have been bag holding at levels that never made sense from a fundamental perspective, and they have a conspiracy theory about evil hedge funds
to $1 million a share,
fake shares, all this stuff, and they've sort of lost the plot, and they've gotten themselves into a bag hold situation that is, frankly, it's kind of sad because the insiders have been cashing out massively. The executives at those companies are really the ones who are winning at the expense of
the retail investor.
So I mean, I love that the retail investor got empowered and that there was so much excitement over investing and that they were even able to move stocks. But I think you're right, like maybe as we return to a more difficult market environment, people realize this game is harder than it looks.
Right. And you don't want to go into it having that mindset, oh, this is going to moon no matter what. And you put all your money into it and then it doesn't moon. And you're dealing with a freaking terrible sentiment in a stock that is going to be unshakable for years. It could take years,
The problem with the YOLO mentality is it breaks my number one rule. My number one rule in investing and trading is don't do anything that will permanently take you out of the game.
Exactly.
And if you put 100% of your portfolio into a fucking meme stock at $300,
looking at no fundamentals at all, not even a little bit.
You broke rule number one, and you're probably going to leave the markets, and hopefully you come back. But I know a lot of people that get burned like that or burn themselves like that, and they never come back, and they suffer for decades because of it.
And that's what I don't want. That's what I'm afraid of. I don't want people to think that they can't win in this game, because you can win in investing with a long-term strategy.
Yeah.
And with, the right focus and working on the right skill set. It is a skill set.
Absolutely.
Period. No matter if it's short or long term.
There will be more short squeezes. There will be more stocks that double in a day.
Absolutely.
Crypto, will do the
There's
same
always
thing.
another trade.
But there always has been, guys.
Yeah.
I remember when I was day trading over a decade ago, there was always a stock that was up, over 100% in a day. Biotech's popping off out of nowhere for no reason. I mean, this has always been happening. And it's going to continue to happen.
And you can play it, just, again, don't break rule number 1. Don't do anything that's going to permanently take you out of the game.
Yeah.
Yeah, exactly.
Yeah. All right, cool. Let's move on. We got several more questions. Let's keep kicking along here. Kyle was asking, what are the potential effects of a Russian invasion into Ukraine in the economy and the supply chain? I don't really have a strong opinion. I don't know. Do you guys have a strong opinion on that?
I mean, certainly the effects would be pretty horrific in the short run for markets. I mean, I think...
how would that affect the U.S., though, specifically?
Well, so it would actually be terrible timing because, we're trying to deal with inflation without raising rates too quickly to choke off the economy, right?
And supply chain issues.
Yeah, so the Fed is trying to thread this needle with all these other external issues like supply chain.
Well, how much of our supply chain is really tied to Russia and Ukraine?
Well, here's the thing, though. The energy markets are global, right? And so the very first obvious one is that if, Russia were to aggressively invade Ukraine, natural gas prices and crude prices would go parabolic for the short run, at least. And so there'd be shortages of certain types of goods. I mean, even things like fertilizer, and there's areas where, Russia still plays a big role, or because of the disruption, it will create a shortage situation during a time where we're already dealing with these other issues, right?
Yeah.
And so that would have, a pretty heavy impact on, on certain commodities. Certain commodities would likely go parabolic, which would create a bigger problem for economic decision makers who are trying to bring inflation under control. It would make inflation worse in the short run.
Oh, yep, that makes sense.
And then, so those kinds of, there would also be a lot of second and third order effects of this as well, by the way. But, I think people would actually probably weirdly enough, people would actually probably pile back into government bonds in the short run, which is really weird. It would actually make rates go heavily negative on real rates, like maybe to a level we haven't even ever seen, because counterintuitively, even though inflation would probably move higher in the short run, people would seek the safety of government bonds, which would make yields go down.
They would de-risk.
Which is so weird to think about. So real rates would actually probably go deeper negative. Might actually help crypto. Maybe. I think the initial sell-off in crypto would probably be severe for a couple days. Then maybe you look at the situation with even deeper negative real rates and you're like, well, maybe crypto is actually like something you'd want to own here.
Yeah.
So yeah, that makes a lot of sense.
Yeah, I mean, I don't know. It would be very weird. Obviously, there'd be, probably defense stocks and defensive stocks would be the only ones up in the market. You'd have a sell-off in equities. You'd have people flee and go into government bonds. Yields would be down, but commodities would probably stay bid in certain areas like energy. So it would be pretty nasty. It would be pretty nasty.
It would be a good trading environment. Let's say that. At the least, we'd have a lot of volatility and probably some good counter trend trades.
Yes.
Okay.
I don't know what the precious metals would do, like gold and silver, because you would think, well, maybe gold and silver play a hedge role. They're a commodity. Maybe people flee to those. Maybe the fact that real rates go more negative should theoretically be good for gold, but I don't know. If you're not like a pure play commodity or bond, I'm not sure. Like initially you do well. I think initially a lot of asset markets just sell off.
Yeah. That's actually a good kind of segue into this next question. Crypto Medius was basically wanted our thoughts on this chart. He said Bitcoin's been extremely correlated with the S&P recently, and even though they rebounded, the SPX did break several key levels. And so he basically he's pointing out that, the S&P 500 is looking potentially bearish. And because Bitcoin in the past couple of stock market crashes back in 2018 and then 2020, because Bitcoin followed those, he's basically making a case that, hey, we could see much more downside in Bitcoin if the bear case plays out in the S&P. And I know this is kind of a popular chart that's starting to form, is kind of the big head and shoulders. A lot of perma bears love to talk about this anytime that there's a lower high and you're testing a neckline. So there's absolutely potential for an extension to the downside on the S&P. And if, there was like a catalyst in Ukraine that caused the second leg down in the stock market, would Bitcoin follow? I think so. I mean,
initially, for sure.
Initially, absolutely. Yeah. Like anytime there's a rush for the exit in equity markets, we've seen a rush for the exit in crypto markets too, because people need liquidity. And how do people in today's world pay for their bills and buy food? They do it with fiat currency, right? Hopefully that is going to get chipped away as we go on over time. Hopefully we see that uncorrelated behavior increase. But so far, based on the data we have, there is that correlation in times of panic.
Mm-hmm.
Yes.
Mm-hmm.
And we've talked a lot about this, Trav. You ran the data and found that in certain time periods, Bitcoin and stocks are uncorrelated, which is what we want to see.
Mm-hmm.
And hopefully that continues to grow over time. But yeah, I think if the bear case in the stock market plays out, or if Ukraine does something and markets panic, we could see much lower prices in crypto. So always think about, like, what would I do, or what, what's the play? What would I think, and how would I behave if prices went down another 50% from here? Right? You've always got to be playing defense and thinking about those bear cases.
Yes.
Yeah. All right. Next question. Is Big Tech overvalued still? There've been a lot of pullbacks, but like you said, Google's hitting a new all-time high as of yesterday. There's still a lot of stuff that's really expensive. So I don't know if you can give a broad answer to that, but
yeah, that's a tough question, because I think, something like Google, which absolutely smashed their earnings and are growing, they were growing still over 30 or 40% last quarter from the top line perspective. They're still only trading at a low 20s, maybe even like, I don't know, I want to say it was like 24 times as of yesterday or today earnings. That is not a crazy multiple for like a monopoly business that's still churning out profits, buying back stock, et cetera. It's actually is a little bit elevated to where it was trading, at some periods in the past, but it's not like an outright expensive multiple. Even Apple, which is trading, historically fairly expensive for Apple at, 28 to 30 times earnings, that's still not that's not at .com crazy levels, right? Apple's profitable, it's growing still. And, maybe it could trade at 20 times earnings and be a relative bargain. You can't say that 28 to 30 times is crazy expensive. It might be a bit expensive. Facebook after hours only trading, I think, for like 16 times this year's earnings. Growth is slowing. They've got some expenses increasing. There's some questions about the long-term user base, but that's not an expensive stock at these after hours prices. So I wouldn't call them like crazy expensive. I would say some of them are still elevated, but the ones that are still a little bit elevated are just absolutely delivering on the numbers. So I don't think Big Tech is overvalued. I do think there's still room for them to maybe compress in terms of valuations in a market correction, but I don't think that I would call them overvalued generally.
Yeah, I agree 100%. I wouldn't call them overvalued. I think there's definitely room for lower in some of them, but I think that there's a point to where the dips are going to get bought furiously in these things. Like if we saw Big Tech correct, significantly from here, which I don't see it happening right now after we've had Facebook correct and Netflix correct, but as far as Microsoft, Apple, Google, these companies, these are $2 trillion companies growing at double-digit rates still. It's kind of shocking, actually.
Yeah.
If you think about how big these market caps are for these corporations, and they're growing at growth stock rates still.
Yeah.
Now, is that going to normalize and slow down? Probably.
But could that send a shock? Like, I mean, I think today we saw Facebook, right? They missed, or did they miss, or they
gave
weak
guidance. Pretty weak guidance. So they're going to grow. I think they said between 3 to 11% revenue versus analysts had expected them to continue growing about 20% this year.
Okay, so let's use that as an example then. If Bitcoin, if Facebook's down 25% after hours just because of that. What if Google, Microsoft, Apple has something similar where it's like, okay, guys, we're not growing like growth stocks anymore?
I think that is very likely in the future. I mean, I think that's very
going to happen at some point.
But, but I also think that if they do see corrections and multiple compressions, there's going to be a point to where people are still going to want to buy these stocks.
Yeah, I think what we're saying here is, because the question is Big Tech overvalued? I don't know that I would use the word overvalued, but that doesn't mean that they can't correct another 15 or 20% and they're still, that would be perfectly rational. Like, there's no reason, if Apple's trading at 28 times earnings, there's no reason it can't trade for 24 or 23 times earnings.
Right.
Now, I don't think these things are going to be down 90%, but could they be down 20, 25% from here? Sure, absolutely.
And that could be potentially a good buy opportunity
exactly,
then, right?
Yeah.
Exactly.
Yeah. Okay.
I think that they will be good buying opportunities if that happened.
Cool. All right, next question. Section BTC was asking, can you guys do a little dive into the DXY, the dollar index? How can this go up in value while inflation goes up? I know it's measured against other currencies, but it's difficult to comprehend the mechanics. So why don't we pull up a chart too? We'll just take a look at some Forex charts. And for anybody that is new to this, you've got there's a couple of different dollar indexes, but the DXY is one of the more popular ones. And basically, this is a measure the value of the dollar compared to a basket of other currencies like the euro, pound, etc. And I don't know. I mean, so the question is kind of broad, but Trav, do you have any way that you think about the value of the dollar going up and down against other fiat currencies in the face of inflation?
Currencies are extremely hard to value because, one, there's a ton of macroeconomic variables that flow into it, and two, it's always relative. So, you have to ask the question against which currencies. And so, yes, DXY is the dollar versus a basket of currencies like the euro, the yen, the pound, etc. And one of the major things that drives changes in relative currency values is relative interest rates. And yes, inflation is going up, but it's kind of going up globally. So on a relative basis, U.S. is moving towards raising rates, right? The other countries in the world are also moving towards raising rates. Inflation is up for everybody. So when you talk about a relative change in the U.S. situation versus others, it's not that massive, right? You think about like other countries like Bank of Canada last week kept their rates unchanged, right? So why would the U.S. dollar depreciate against the Canadian dollar if Canada's also seeing inflation? Canada and the U.S. are both on the path to raising rates. Like, there's no relative change there between those two countries in terms of their policy and in terms of what they're seeing economically. So it's all about relative changes, particularly relative changes in expected future interest rates. So, yes, inflation's a problem, but inflation's a problem for a lot of countries. And the U.S. is actually moving into a rate hike cycle, which, if other countries kept their rates, they didn't raise their rates and the U.S. was raising rates, you actually would expect the dollar to go up as the the cost
for the dollar.
As your interest that you're earning on dollar denominated assets goes up.
Right.
Yep.
So it's very complicated. Currencies are very, very complicated. There's also a lot of short-term factors where central banks will come in and move currency markets because of imbalances in trade and fiscal and monetary policy. So it's just very, very difficult, especially in the short run, to figure out what are the variables driving it. But just think about relative interest rates and relative expectations of interest rates between countries. That's how you have to think about it.
Yeah, there's definitely a lot of misconceptions, and I get tweets and emails from people all the time that think about the value of like the dollar compared to Bitcoin in very strange ways. They're like, well, if the DXY is going up and Bitcoin's going up, Bitcoin's really not going up, but it is. It's going up relative to the dollar. So if the dollar is rising and Bitcoin's rising and the stock market's rising, it's kind of like you want to own USD denominated assets, dollars, because the dollar, I think, and tell me what you guys think of this. I look at the dollar as like the least ugly dog in a shit basket of fiat currencies.
Yeah.
It's like, if I have to have one, I think I want the dollar.
Yeah.
You know, I don't want too many of them, but I know I need some. But I also want, you know, I prefer to have Bitcoin and gold and property and then USD denominated equities, stocks, right?
Yeah.
Maybe some bonds. I don't know. They're a shit basket too. I don't know.
You don't want the bonds until the interest rate hike cycle.
Yeah.
Then you take the bonds.
Yeah.
I don't know. How do you guys do you think that's accurate the way to look at the dollar compared to the other basket of shit?
Yeah, I mean, yeah. Yeah, I don't think it's a bad way to
We're
look
so
at it.
classy.
Yeah, I don't know a better way to say
This
it.
is how you talk finance.
Yeah.
Yeah, no, I mean that's definitely been true over the past, couple of decades. I mean, I think, especially because the dollar plays, that significant role in the petrodollar system, in global trade. There's so much demand for US dollar denominated assets. But yeah, I mean, if you're just thinking about it from, an investor's perspective, you want to own assets that can increase in value faster than inflation. And those are typically going to be, equities, both domestic and foreign.
Real estate.
It's going to be real estate. It's going to be crypto. It's going to be the stuff that's proven over many, many decades that it grows faster than inflation. So yeah, I mean, I don't focus that much on currencies, to be honest, because of that, because I'd rather spend my time looking at the assets that I think are going to grow faster rather than trying to play like...
It kind of feels noisy to me to focus on it too much. But I don't know.
Yeah, you will make your mind spin if you try to think about what currency value should be where and when and why and what the variables are. Because again, there's so many macroeconomic variables globally that are affecting different, pairs of currencies.
So I think what you're saying is just buy Bitcoin. Okay. Cool. Heard loud and clear.
Bitcoin fixes this.
Yeah, exactly. All right. Next question. Some big banks have been advising their clients to buy gold. Yeah, I think that's been true for a very long time. But could this finally be the year when gold outperforms Bitcoin? I've actually been thinking about that. Peter Schiff is going to have his day one day. And one day in the future, Bitcoin is going to underperform gold. I'm calling it. I don't know when. I don't know how long it's going to last. But there's going to be a period of time where gold, for whatever reason, is going to outperform Bitcoin. I mean, honestly, I like the gold chart. I hate to say it, but I actually...
It's holding up. Gold is holding up pretty nicely.
I mean, as far as a trade,
if it was gonna break out, it would have broken out by now, though.
Well, I don't know. Look, I look at a monthly chart on gold. Gold is so slow, right? Which is not a bad thing. Gold is very slow. For anybody that doesn't know, I've said this many times. I accumulated some gold back in between 2014 and 2018 or 19. So I'm in around the 1200 area, and it popped up, made a new high against the dollar, and is still holding a higher high against other fiat currencies. But I primarily look at like the gold futures. It tagged a 61% extension. So it tagged a target up here around 2000. But as of right now, the weekly, the daily, and the monthly chart are all holding up. So gold has actually been looking relative to Bitcoin the past couple of months pretty strong. Now, how long will that last? I don't know. I think Bitcoin is better than gold in many ways. We've talked about this endlessly on the show, but I still own some gold.
It plays a nice hedge role in certain environments. And I think, one environment that plays a really nice hedge role is if inflation surprises to the upside, because, policy makers are going to be in a tight spot, kind of how they already are now. Imagine inflation accelerates even further from where we are now. Policymakers, I mean, the Fed just frankly can't raise interest rates to 5, 6, 7%. Just not going to happen. Just won't happen.
They will wreck the markets and the economy if they do that, and they know that.
Yeah, and so, they're in a bit of a tight spot, but, if because of supply chains, because of, maybe things happening in the energy or the ag markets right now, if those things accelerate and commodity prices really get out of control and we get into like a severe shortage super cycle issue for a couple of years, the real rates are going to go more deeply negative as inflation rises and policymakers are not able to raise rates as fast as inflation's rising. That will be an environment similar to the 70s where I think gold will do quite well and play a really good hedge role in the portfolio. So I think if you do have that in your bingo card
Yeah.
for the next year or 2 or 3, then you should own gold if you think inflation's going to keep surprising to the upside. Now, I will say there's a lot of macro-focused people that are macro-focused investors that think that inflation is going to come down this year. They think that, the whole goods inflation, supply chains will, start to get fixed as we move later into the year. Therefore, that 7% CPI that we're seeing is going to start to moderate. And so you maybe wouldn't want to own gold in that environment. If inflation starts moderating and rates are going up, that means negative rates are actually compressing and gold might actually do really poorly in that environment.
Or just be flat and do nothing.
Yeah.
Like
So-
it did
Which
that one
gold
time.
does historically
Yeah.
stay pretty much flat. It wasn't until the early 2000s when the ETFs came out that gave a massive pump to gold. So,
Mhm.
and that's
Mhm.
why I think, the Bitcoin community's like, hey, come on,
Bitcoin ETF.
let's go Gary Gensler, SEC. Let's get some ETFs going here.
But yeah, so that viewpoints, there are people on both sides of this trade right now, I think, in terms of, gold's going to go up or gold's going to go down based on what inflation's going to do for the rest of the year. Honestly, in the short run, I'm a little worried that inflation could continue to surprise on the upside. Like, we still have crude and natural gas prices going up significantly globally. We still have shortages. There's a fertilizer shortage. There's shortage still of a lot of industrial parts and things in the supply chain. Ag prices are going up. Like, I forget which one, but there's a index of ag commodities that I believe just hit a multi-year high or a multi-month high. So that, and then of course the Russia-Ukraine situation, like we talked about earlier, if that ever escalates, then it gets even worse.
Yep.
So I don't know. Maybe gold's not such a bad trade here or a bad hedge.
I think that having some in every portfolio is not a bad idea. I mean,
Yeah.
when you look at the long run, we're going to see periods of inflation and we're going to see recessions. And I mean, having a small allocation to it just as a just in case allocation
Mhm.
is not
I look
a
at it
bad
as like
idea.
it's like a less volatile alternative currency.
Right.
I love Bitcoin. Obviously, the gains have been much better in Bitcoin over the past decade, but with that comes a lot of volatility. I think gold is cool because it's physical and it's different, but I like Bitcoin better. Yeah. I don't know. You don't have to be tribal. It doesn't have to be one or the other.
Yeah.
Right? All right. Last question, I think. Maybe. What was your favorite vacation/trip that you've ever taken and why? What made the trip so special? I thought that's a good one.
That is good. That's a tough one.
Yeah. Favorite trip. We've traveled a lot.
How do
Been
I
to
pick one?
A lot of countries. I don't know. Whenever I think of like experiences, like we've done safaris, obviously scuba diving trips all over the place. Man, there's so much. I don't know. Trav, does anything stick out for you?
I mean, I feel like I have to say my honeymoon.
Of course you do.
No, it doesn't have to be your honeymoon. It just has
Yeah.
to be a trip with your wife. That's all.
Yeah,
that's right,
she
that's
better be
right.
If
involved.
it's a trip with your boys, not flying.
Yeah, that 1 week in
Yeah.
Vegas, right? That was memories were made.
Oh man, yeah.
So in 2014, Nikki and I did almost a full year around the world. I mean, that was obviously the most epic journey. Did a bunch of videos and actually called it Epic Journey. Started in Iceland, went through Europe, Africa, Asia. Did we do Australia on that one? I think we may have skipped
Yeah, we did Australia years before
Oh,
that.
okay.
Yeah.
But
You know,
I don't know. I think your favorite place is Switzerland, right?
Switzerland stood out to me big time.
Yeah.
Because I'm a big mountain lover, and Switzerland is like out of a movie. It's out of just, you can't even describe how large the mountains are.
Yeah.
And
pretty epic.
so that was very special for me just because I love the mountains, and it's literally the most epic mountains you can ever see. At least I think.
Yeah.
Well, the Himalayas might be pretty epic too.
Mm-hmm.
Himalayans. I haven't seen those.
Yeah. Outside of that trip, for me, it would have to be the scuba diving with the sharks in the Bahamas, because I literally had a shark. I was in a shark's mouth up to my elbow. I had the metal suit on.
You're
were
crazy.
hand feeding sharks, and one sped up a little too fast and got my arm. That was the most surreal feeling I've ever had.
Oh man,
having a shark like bite down on
that's
it didn't
wild.
hurt. It just felt like a lot of pressure. But if I didn't have that chainmail suit on, my arm would have been gone like that. For
Oh
sure.
wow,
Yeah.
that's wild. I think I really like adventure trips. The one that we did to Peru and hiked the Inca Trail and eventually got to Machu Picchu. That one was pretty epic because like you really like worked for it. You know, you hiked for 4 days. Well, first of all, you had to fly in and just get used to the altitude for a couple days, and then you hike for however many 26, 27 miles or whatever. Wait, no, that doesn't sound right. I don't know what it was. It was a lot of hiking.
Yeah.
Like 4 days of hiking.
No, yeah, I agree. Adventure trips are the best. Cruises, all right, that's cool, but like, get out in nature, do some real shit.
I like ski trips.
Yeah.
Oh, yeah,
Of course
ski
you do.
trips.
I honestly, I was gonna say a ski trip as my favorite trip, but I couldn't like quite pin down the exact one that was my favorite.
Yeah.
But oh god, I love skiing.
Oh man, it's a big world. There's still so many places and things that we got to do.
Yeah.
know.
Now that we're opening up, we got to get back on the road
Mm-hmm.
for sure. All right, one more question. Possible macro implications of India's unbanning of crypto. I don't know if you guys saw this.
They're unbanning it.
Yeah, they had banned it, then they unbanned it, back and forth. And then this week, they basically said, like, hey, listen, we're unbanning it, but we're going to take 30%.
I mean,
So 30%
that's
across
fair. Tax it.
the board. Hell no, it's not fair.
No, it's better than banning it.
Yeah.
Okay. I mean, look,
Okay,
we're
look.
doing that in the US. Like, okay, you can
Yeah.
use crypto, just the IRS just wants their cut.
Right?
They want their bones.
But the problem that I see, look, okay, yes, it's a positive development. Yes, we're moving in the right direction, but we should be there anyway. Okay, now that we are, let's address the tax stuff, because the way that I understand it is there's no tax losses, there's no write-offs for business expenses. It's they get their 30%, there's no write-offs or anything, and so it's kind of like your risk, our profit kind of mentality, which,
look,
it's a step in the right direction, I guess.
And maybe it'll be like
Yeah.
cannabis, like you get the first, you get medical first and then you
Yeah.
get recreational. Maybe you get the, okay, it's unbanned, but you got to pay us a lot of, taxes, and then eventually they can work it
why didn't they just do
up
that to begin with?
Hey, we're going to actually have sensible policies. I mean, it's 1 billion plus people though, so it can't be a bad thing that.
I mean, that is an economy that needs Bitcoin.
Mhm.
Yes, big time.
I mean, we talk about this at length about who actually needs Bitcoin. People that are living in a cash-based society where India, what was it, 5 or more years ago, they overnight almost they made a majority of their bills just illicit and worth nothing, right? Like people under those types of governments need Bitcoin the most. So I do think it's a positive step. Will people try to get around the taxes? Maybe. I don't know what that situation's like over there, but I don't know. Maybe anybody that's watching or listening can comment and give us your opinions if you're in India, what the situation is.
We were talking to a friend of ours today who was working with a contractor in Nigeria who, they were getting paid their cross-border transaction payments via Bitcoin or via, I think it was, actually, no, it was USDC or it was a stable coin.
That's right.
And they were paying it through like a US exchange. And so what was interesting to me was that happened organically. That happened because that was like the easiest way for those two parties to connect and pay one another. Because our buddy couldn't pay his contractor in Nigeria through Square or PayPal or Venmo or whatever because they didn't have it there in Nigeria. And so he's able to pay him via USDC, via a crypto exchange. That's like one of those fantastic use cases we always said would be, one of the main use cases for crypto. So it's great to see it. Sometimes these things just take longer than we think they will. Yeah. But you love to see the promise being fulfilled.
If you look at the history of money, there's a couple of books that I really like where, it basically lays out from the earliest forms of money to where we are today. It's like changes in money have taken thousands of years, in historical times, like 5,000 years plus. In the past just couple of 100 years, the evolution of money and how fast it's changed is mind-boggling. So like Bitcoin's only been around a decade or so, and the changes that we've seen, it's accelerating. But obviously we want everything. I want everything fully, decentralized currencies overnight. We're gonna get there. Like you said, it's taking time.
You want everything decentralized currencies? No chargebacks, no fraud protection.
No, I mean, you can
None of
add
that?
those layers. Yes, you can have
All
fraud
right.
protection layers, but I trust Satoshi more than I do Mr. Powell. Let's just say that.
Sure is nice to do that chargeback when you get, fraudulent charges or
Yeah.
something like
Yeah.
that.
But that's the thing. I mean, if you're in a debt-based credit card society, you need
I
that.
get it. I
Yeah,
get it.
I don't know.
Yeah.
Whatever. All right. Anything else you guys want to cover before we wrap it up? Obviously an important moment in time in the markets. We've got a potential head and shoulders here in the S&P 500. Bitcoin's prices are, hanging out around multi-month lows. Let's just take a look at the chart real quick. Yeah, I mean, we've been in a downtrend for several months now. We're hitting 30K-ish support area, but obviously a lot of uncertainty right now.
Yeah, it's still going to be a critical next few weeks, I think, in markets with still more earnings to be reported, key levels, key technical patterns. Will they hold up? Will they break down? And will Russia invade Ukraine? And it all just goes to shit or not?
Yeah. Will this be a crowded short?
And see
That's kind of
another
where
squeeze
my
again.
mind's going. I'm starting to get there. Everybody thinks the market's going to just take a dump.
Yep.
And I'm thinking maybe we could be seeing a crowded short playing out in the S&P 500
Yep. I mean,
over
dude,
the next few weeks.
that was the narrative right here. So back in May of 2020,
yeah, I remember that.
the pullback, like this was one of the biggest short squeezes of all time, was through the $3,000 level on the S&P 500.
That lasted like a year and a half.
Yeah. I moved some money into a futures account, and I sat there for several days just going, should I do this? Should I do this?
I think I talked you out of it. I said no.
Probably.
I did.
Yeah, because I'm like, all right, do I hedge this or do I just buy more Bitcoin? And I think I just bought more Bitcoin.
Which was the correct
It
And
was
then-
the
decision.
right play.
Yeah.
Yes.
So
All right.
let's just keep making correct
I do remember
decisions.
that. And
Yeah.
yeah.
All right, cool. Well, guys, thanks for joining us. Thanks to our sponsor, Y-Charts, for sponsoring the show. Go to wetalkmoney.com. If you have any questions you want to submit to the show. What else?
Check us out on wetalkmoney.com for links to the community if you're interested in that.
Yep.
If
Yes.
you're interested in joining us and being part of the wealth building community and
Hang out
getting
with
access to
us.
research and ideas. And
Yeah. Hopefully we'll be able to do a live event this year.
yes.
Looking forward to that.
Boot camps very soon, we
Yep.
hope. We're firming up dates for those. So if you're looking to go deeper into learning, crypto, stocks, etc., fundamentals, technicals, all of it.
All of it.
All the above.
Yeah.
All right.
Become a well-rounded investor / trader.
Learn how to YOLO into GME. And that's the
We-
end of
we
it.
will not be
At
doing
$4.
that.
At $4.
At $4. Yeah.
Okay,
Where
yes,
you
at
guys actually
$4,
got in.
yes.
Yes. All right. Thanks for joining us, guys. We'll see you next time. Take care.